You're now plugged in to the Delphi podcast.
Hi, everyone, and welcome to another episode of the Delphi podcast. I'm José Maria Macedo. I head up Delphi Labs, and today I'll be co-hosting an episode I'm really excited about with Matty from Legion, a project that we incubated at Labs and that just announced their big round, and Filip from Cookie3, who's been working together really closely with Legion to build what they're calling attention capital markets. So first of all, congrats, Matty, on the round. Huge win, bringing in the big TradFi names, Brevan Howard and VanEck. It feels like yesterday that we were kind of brainstorming on this in Portugal, like whatever it was 2 years ago. So it's awesome to see how far you guys have come and how you've executed on it. Um, so maybe as we start, you could just intro yourselves and talk about Legion and Cookie3 separately, and then we can go into the ACM vision.
Cool. Yeah, thanks for having us, Jose. Maybe I'll dive in and happy to hand it off to Filip. On my side, super brief personal background, TradFi background, data scientist, machine learning, started getting into crypto in 2016, 2017, ICO craze originally. I've been in full-time in the industry last 4 years or so. And with that lens, kind of came into this space in parameter optimization, token design type of roles. And so kept seeing founders make dumb decisions about distributing their token. And so started thinking about how is there a way, we can align incentives, get back to some of the elements of 2017, get smarter, more data-driven, right, token distributions. And that kind of led me to meeting Fabrizio, my co-founder, right, and the Delphi guys, and just brainstorming around these concepts, as you mentioned, Jose. That was coming up on 2 years ago. And obviously now we've just announced our seed round raised from VanEck and Brevan Howard Digital, and also married that with some of the exchanges and some of the more native DeFi players, Coinbase Ventures, Kraken, Crypto.com, Bitscale, Blockchain Builders Fund, etc. So we're super excited. We see kind of the future of IPOs, right, the stock market, and ICOs as being one and the same thing, and that's ultimately what the world that we're building for is when community formation, capital formation, on-chain fundraising is all happening on chain, right? Instead of these legacy type of systems that we've seen today. For that to happen, obviously, there's a regulatory piece that needs to evolve, which we're participating in. But there's also a bunch of incentives and mechanisms that need to be improved, and that speaks a lot to what we've done with Cookie on the attention capital market side.
Filip, go ahead. Give us an intro to Cookie3 as well, and also just your quick background.
Of course. Yeah. Thank you, Joseph. And congrats, Matty, as well. Big deal with the recent round. So I'm CEO and co-founder of Cookie3. In terms of my background, I'm coming from marketing and data side of things, both professionally and I was studying that both fields. So was working mainly in marketing startups and Deloitte Digital, implementing different solutions into financial TradFi systems, involved in crypto from the investment side of things since late 2017, since late 2021, building Cookie3. So we were coming up with Cookie3 at the very beginning from the pretty straightforward goal to track the capital attribution in Web3, which was and still is quite challenging because like as in Web2, we have pretty battle-tested ways of doing so. We have only off-chain data, so we can do some referral links, we can do some UTM links, we can measure specifically in local systems what kind of like conversions are happening.
Sorry, what do you mean by capital attribution exactly?
Yeah, so basically like in Web2, you can measure the attribution itself by using known solutions like Google Analytics, for example, or any other analytics provider that is actually measuring the flow and the conversions of your user base, and then retention, churn rate, but it's only limited to your local system where you are actually integrating it in kind of like limited environment. Whereas in Web3, we have this like on-chain data, on-chain world, where like we have open ledgers of public blockchains, which are like plenty of them. So basically, you cannot measure everything within your internal system, but you have to actually take into account what's going on outside of it on the blockchain simply. And this is why we like came up with solving that by merging these like two worlds of like off-chain data coming from in-platform data, from social data, with on-chain data, because like you cannot live without any of those words if you are running a company in Web3, because you are simply providing like you have your own website and platform, you have your own social media, but on the other hand, you have your own protocol that is running on chain. So you have to actually merge those two words in terms of like understanding what's going on in terms of like user base funnel. So this is like what was like initially as a goal, and actually right now with ACM it correlates a lot, because like we found out that actually it's still not solved in terms of measuring the capital influence of the creators. So along the way, we came to the point where we are already providing very sophisticated solutions for measuring attribution within Web3 protocols. But then we also came up with a few solutions of actually activizing creators to actually provide the value in terms of creating quality, insightful content about specific projects that are incentivizing those creators. So we are kind of an oracle that is providing scores and points based on the value that is provided by the specific creators. And this is quite challenging. We can dig deeper along the conversation, but generally that was also the reason why we came up together with Legion with attention capital markets, to actually link the capital element to the attention, because like we believe that the measuring pure attention is ultimately a vanity metric and can be gained easily, pretty easily.
Okay, interesting. Yeah, I'd love to dig into that more. So maybe to start with, what is attention capital markets, and kind of why did you guys come up with this term, and what's the vision behind it?
Yeah, sure. I can dig in. So basically, like ACM is a market where attention clears if it's backed by direct or indirect capital inflow. So basically, we turn mindshare into like probable signal of influence by linking attention with the like real financial commitment. So we are not only measuring the engagement metrics, views, smart engagement, and so like every element of the mindshare, but we are also trying as much as possible to link it with the capital influence. So like how big the influence of the specific creator is actually impacting the decisions and the money flows of their audience, of their followers. And this is like what we are trying to achieve here, because this is, we believe, the ultimate, the most effective metric to actually like calculate the quality and the value coming from those creators. Matti, if you want to.
Yeah, I mean, from our perspective, attention capital markets is all about combining those two things, right? People paying attention to the project, speaking about the project, and also putting in layman's terms, putting their money where their mouth is, right? You have kind of, as we know, anything that is kind of incentivized in crypto oftentimes gets botted, gets sybiled, and you have these kind of protocols rolling out at the same time that AI has made it super cheap, right, to create a bunch of content. And so we have kind of a higher noise to signal ratio. I think people have noticed this on their timelines, right? On crypto Twitter, there's less signal relative to noise these days in some of these feeds. And so attention capital markets is a tool for getting back to some of the golden age, right? And finding who is putting their money where their mouth is, who's depositing TVL, for instance, as they support a project, who's referring others who deposit TVL, who's investing in their early rounds or their ICO, TGE sale. And so it's not just about tweeting about every project out there and farming airdrops. It's about supporting projects you actually believe in, putting your money where your mouth is, even doing other off-chain actions like contributing code, making introductions, right? I think the evolution of attention capital markets is all about distributing tokens or enabling projects to distribute tokens to value add supporters and investors.
Yeah,
Yeah.
I think a good analogy and like good example of that could be even like MicroStrategy with their like Bitcoin like belief, because like they are putting billions on the table, and this is why they have pretty like outsized voice on the market, because everyone knows that they are actually putting those billions on the table, so they are very credible in terms of their opinions on this specific issue.
Yeah. Makes sense. And it kind of goes to the core of, I think, what Legion is also trying to solve, which is this idea that I think capital is abundant in this world. There's sort of more capital chasing opportunities than ever. And the key is really finding out who is the value add capital. And I guess that's where Cookie3 comes in with the attribution technology that links like all the off-chain stuff with this. And that makes sense. And so it's kind of like, yeah, being able to identify who's the value. Yeah, how does it work? Maybe that's the best way to start. Like, what's the implementation right now? You kind of gave us the high level, and then maybe we can go into stuff you want to do in the future too.
Sure. Yeah, Philip, do you want to maybe just give a brief overview, and then I can also talk about the way that ties into some of the Legion score stuff we do?
Yeah, of course. Yeah, so basically, to put it very straightforward, we are measuring this mindshare, so engagement rates, like social rates and metrics, and they are being boosted by the capital like element in different ways. So either, so let's say let's make it on an example. So there's like the first campaign that is right now running, which is Almanac, that actually successfully raised 2.5 mil with 400% oversubscription recently. So right now, before the pre-sale happened, people were able to actually snap, so like create insightful quality content about the Almanac to get eligibility to invest in the pre-sale on more attractive terms, and to have this guarantee that they will be able to actually invest. So they were like kind of competing of eligibility to invest. And then once they invest, their like content scores are being boosted by this commitment, because they are like proving with their own capital that they are actually believing in the project, and they are putting their money where the mouth is. So basically, this is exactly how it works. So it works like in both directions, either boosting the content scores by the capital commitment, or giving you kind of like new capital opportunities by providing quality attention to the project.
Yeah. So I mean, I guess there's there's a few different ways to answer this question. There's kind of like how are things measured, there how it ties into a specific sale. There's how projects can use all these metrics to kind of select the right investors in their sale. So as Philip touched on, yes, we have this. Cookie has this great representation of kind of who is moving the project forward in terms of awareness, in terms of engagement. We can marry that with on-chain data, right, about who's putting their money where their mouth is, as I've been saying. This creates like leaderboards and rankings that can tie into, in Almanac's case, for instance, right, access to a discounted pre-sale or portion, a kind of a discounted portion of the sale. And so they look to raise 2 million in total, ended up with 8 million in total allocation requested, and then the top 50 people, based on kind of their activity, supporting the project, engaging, talking about it, and combined with their capital contributions, got access to a discounted round that was also oversubscribed. And so these users are getting access to sales, getting access to discounts, even potentially of things that they're actually supporting in both word and action. And then also, of course, that marries with some of the stuff we're doing on the Legion score side of things that we're increasingly integrating with Cookie on. But things like their developer contributions, right, and certain on-chain achievements, and all these scores and attributes that the founders of the project can then go through on Legion. And if they wanted to, literally go one by one through everyone who's applied, read their cover letter, look at what they've committed to, look at their scores across these aspects, look at their achievements, and then select, right, hand select who they want to be their backers, customizing support, customizing allocations, discounts, etc. So the future of attention capital markets, the future of both Cookie, and Legion is continuing to just get smarter and smarter and more holistic and in-depth representations of who are these people. How do we have a sliding scale of confidence that they're unique people, they're not bots, they're not sybils, and that they're the right people for each project. And I think the key thing to keep in mind, right, is that what's right for an L1 might not be what's right for a DeFi AI farming protocol, right? It's up to the project to select kind of who's the best supporter for them, rather than just dictating, okay, now you're going to distribute your token to 5,000 random addresses that just trust us. These are the right addresses to distribute to. Like the future is smarter, more targeted token distributions.
Yeah, makes a lot of sense. In a way, it's kind of crazy that the standard method for doing ICOs was just like whoever pays the most, right? Just some kind of auction, or even worse, like whoever moves faster.
Yeah. Yeah.
Yeah. Because you're literally picking your first community members, and like a lot of ICO projects find that out the hard way, right? When you have like 2 years of just these annoying like whiners on your Telegram just hassling you all day. That makes sense. And are there so in future the idea is like I'm on Legion. I can have this merit based investing where based on my contributions, based on who I am, based on how I'm talking about a project, and my and all that's tracked via Cookie3. I can sort of have access to projects, both in terms of investing and maybe eventually also like TVL and participation, right? Like maybe having some discounted vaults or something like this. Are there other ways that you can see to link this up? Like maybe describe as you see it right now, like the ultimate vision for attention capital markets. Like what do you how do you see this working out?
Yeah. So that's a great question, and obviously something that Philip and I and Cookie and Legion are already kind of collaborating on. I mean, obviously, as we've touched on, incentives are everything, and so we've started to lay the groundwork. I think we'll lean into this more, but even in Almanac's case, what happens after the sale also governs people earning kind of retroactive airdrops, right? That kind of effectively reduce their FTV, and so I think too much in the space currently is just about farming, right? What do you do before a token is distributed and launched, and then not really tracking the accountability angle, right? Do you keep talking about a project? Do you keep supporting it? Do you keep using it? Do you keep contributing code after the token is launched and you've got your payout? Or were you just an airdrop farmer and you've already moved on to the next thing, right? And so we kind of track like what do people do afterwards, and then there's a feedback mechanism, right, into kind of their scores and their reputation, as well as being able to qualify for some of these airdrops after the sale, after the token distribution, which again effectively reduces someone's FTV buying into the sale. So I think that's the ultimate vision, is tracking holistically everything that someone's doing, understanding the ecosystems they belong to, not just how many followers do they have, but really, as Philip mentioned, how much mind share do they have? How much mind share do they have in a given ecosystem or among a certain type of follower, right? Or topic domain, what type of developer they are, all their social media presences, what type of on-chain user are they, and really getting into this data-driven approach of, like Philip started with, this marketing Web 2 background of finding the right people to hold your token, right? Like we spend all this money and time building all these fancy algorithms in Web 2 just to optimize click-through rates, right, and conversion rates by a tiny, tiny amount. And then in Web3, we hand out tens of millions of dollars blindly and hope for the best. Like that's insanity. Like, so the future will look something more like what Web2 marketing looks like today. We have these super data-driven algorithms kind of predicting lifetime value of a customer and then customizing the token distributions and the token offers to match that essentially, so that you're best allocating your scarce resource of your token emission. I don't know, Philip, if there's anything you want to add to that.
Yeah, I mean, like it you summarized it pretty well. So I don't have anything on top of that. I can only agree, and that's why I'm pretty bullish on the vision we are building together, because this is kind of a no-brainer to provide that kind of solutions, which are already battle tested and which are already earning billions of dollars in Web2, and what like as we are right now kind of like tokenizing every single TradFi asset. Ultimately, we will merge those like two worlds of like Web3 and Web2, and we will be the ones that are already having the battle tested working solutions for both worlds that will be merged into one. So I believe this is pretty exciting moment to provide that kind of innovations and experiments, because like still it's kind of like we are the first one that are providing such solutions. So we are still learning how to improve them, how to make them better. But yeah, pretty excited about that.
Yeah, I'm really excited about that vision too. And maybe if we zoom out a little bit more, and then I want to dig into some other stuff. But if we zoom out a bit, what do you see as the future of just capital markets generally then? Like if let's say 5 years from now, and maybe your most bullish case for like both for Legion and for just for your vision of the world, like how do capital markets work? Like do we still are our projects still raising private rounds from VCs and angels? Are they doing that, but doing it through Legion? Do you still have IPOs? Like, do you still have kind of growth rounds? Like, how do you see the future of like internet attention, capital markets sort of working out?
Yeah, it's a great question, and you have one of the exciting things is you have the convergence of like so many different trends, right? When you start talking about this, so I think in a nutshell, you'll have I think earlier and earlier rounds, but more closely curated and less arbitrary access. Where, for instance, today we have these relatively archaic like accredited investor rules, right? Where only people who are above arbitrary wealth cutoffs can get access to early investments, instead of it being more contextual, knowledge based, or expertise, right? And so you can imagine in the future, right now we have tokens, we have equity. In the near future, we'll have tokenized equity on chain. Of course, Galaxy, right, just tokenizing their equity. We'll also though have even creators. You'll see like Mr. Beast, right, like tokenizing himself, saying, you can buy this token and get a revenue distribution of 10% of like my lifetime earning. Like we'll have crazy stuff like that in the future, right? Where everything is tokenized, everything's on chain. And the early distributions of those things absolutely will be sales, public sales, happening on chain because of the permissionless nature, because of the composability. And what will matter the most is that those tokens are obviously going to the early supporters, the early backers, the early people who are passionate about growing that community, and that requires a bit of technical change. It requires a bit of regulatory change, but that's how I kind of see the world playing out, where the future of IPOs, right, a public offering in the stock market, and the future of ICOs kind of converge. And you have these on-chain big fundraisings led up to by a lot of smaller fundraisings from very targeted small groups. It's not private in the sense that no one can join. It's public in the sense it's accessible to anyone, but it's private in the sense that, it's not kind of broadcast or widely advertised beyond that group. And so I think it's increasingly about finding these niche supporters, distributing your tokens to them, raising funds early on, and then leading up to a bigger, liquidity, a TGE conceptually. I think that trend will continue to play out. You'll have the long tail of VC funds, the tier twos, tier threes plus, dying out versus competition from smarter kind of retail, for lack of a better term. But you'll of course still have tier one VCs around. So I think the future is more data-driven retail, passionate early community, regardless of their wealth. It's about, their heart, not the size of their wallet, and tier one VCs that can still provide expertise because they've seen these problems a million times before with their portfolio companies, introductions to, B2B partners, exchange listings, all that stuff that a tier one can provide. So I think it's an exciting future. If you think about it, not to get dystopian, but if you think about some of the effects of AI, right? Like on the surface, they can be wealth concentrating. And so we need earlier access to investment opportunities. IPOs have been the wealth creation engine for the middle class. As companies are bought earlier by acquisition and as they kind of IPO later, all else equal, people are missing those opportunities to make investment returns. And so we need technology and regulation to keep up and make sure that people have, these responsible access to early stage investments. Yeah, I mean, I'm super excited about that vision, Philip. I'm sure you see a similar future.
Yeah, it's indeed exciting, and on the other hand, pretty scary in terms of like AI. I agree, but yeah, I believe that like ultimately the market will be much more effective, including like running 24/7 with like tokenized or TradFi assets, commodities, and so on, that will have permissionless access to everyone globally, with like trustless like blockchain way. So this kind of like Web3 ethos and crypto ethos that we were all starting with like years ago, I believe this is exactly why this like market effectiveness will be very, very high, much higher, like exponentially higher than right now. On the other hand, I agree that this like kind of like marketing or information market will also get much more effective in terms of having more information about specific influences. So there is this like known shift from switching from these traditional ad networks to more decentralized ones, including creators. So we are strong believers that the creators are the future kind of like, or even current ad networks, the most effective ones. We believe that the trust to the people, to the key opinion leaders, like the real key opinion leaders, are much more valuable than any other form of ad, basically. And once we get to the point where we'll be able to actually measure this influence, the trust, the reputation of those people, I think this is where, like having in mind this effectiveness of the market, the informational market will also like put a lot of impact on that, because we will be able, and like all of the market participants simply will be able to actually get this information and make some money on that. So either it will be like humans or AI agents, but the access to the information will be much more open than it is right now, and that will determine the effectiveness of the whole economy, because people and like AI, automated bots and so on, will be able to make very quick decisions based on that, and to actually, for example, decide about go-to-market strategy in a much more effective way than they can right now, because they are just lacking of the information. What kind of ways are the most productive for their specific case, for their specific certain needs they have, for the target group they are targeting, and so on and so forth. So I believe we are still lacking a lot of effectiveness in terms of like information, and in terms of the whole market like processes, in terms of like tokenizing them. I believe this is where the whole economy moving forward will get much bigger effectiveness in all of that sense.
Interesting. Yeah, I'm not sure. So what do you mean by that exactly? Like the information being, yeah, maybe can you expand a bit?
Yeah, sure. So basically right now, as a project, you're kind of blind in terms of like who is providing you the real value, in terms of like, for
Yeah.
example, running
Okay.
some like creators campaigns. So ultimately you will know everything, and you will know exactly who provided you how much value at the end, at the
So
beginning.
like views, capital,
Yeah,
TVL,
exactly. So like the
investors,
real
right?
conversion. So like starting from the top of the funnel, so like the awareness, which is kind of measurable right now, so we can see what, like how many views you get and so on. But then there's like consideration, conversion, loyalty, so like this retention, churn, that you have to actually measure. And there is like, as we are switching from this like traditional ad networks to the creators economy, we believe this is where our focus in terms of like measuring this attribution should be put it on, because there are no effective ways of actually measuring the effectiveness of those like creators' efforts and their outcomes of those creators content they are creating. So basically, it's quite it's quite funny because even those creators don't have any clue what kind of capital they are backing behind. So like they have no clue about their network capital that they are moving. So it's kind of like unknown world right now, and we believe by providing this information to the market, it will be much more effective because projects will stop wasting money on irrelevant campaigns and irrelevant marketing activities, because they will finally know what is actually providing the real tangible value.
Makes sense, and I agree with what both you guys said. This is the culmination of so many trends that it sort of needs to happen. I mean, even like public markets have obviously kind of ground to a halt. There's been, I mean, this year has been better, but there's been way less IPOs. Most of the wealth creation is happening in private markets. The exception to this is obviously crypto, which was where the most sort of retail wealth was created in the last, maybe in the history of humanity actually, but definitely in the last decade. With you know Bitcoin, Ethereum ICO, even like the Solana sale and a bunch of others, and also even this trend you can see that people want access to these private deals, right? There's sort of this like SPV inception with like SPVs on SPVs on SPVs, like doing like investments into OpenAI or Anthropic or whatever, and you're kind of seeing like Robinhood start to lean into this, right? And want to tap into this thesis, offer these privates to their users. Yeah, where do you think the role is for TradFi? And maybe you can include like Robinhood in that, but just generally, I mean, with IPOs, we have these regulations around disclosures, which have criminal penalties, and there's a lot of burdens to going public. And that's sort of what we defined as a society to be the necessary burdens that we need to impose on these companies in order to preserve like investor protections or whatever. I think Vlad from Robinhood, and I definitely agree, argues this has been like pretty perverted over time, that there's just no, basically the accredited investor test is very old, right? Like there's nothing in there that implies skill. It's just a pure net worth test. It kind of ends up gatekeeping the best opportunities. But I'm curious, like, yeah, what you said IPO and ICOs merge. What does that look like? Like ICOs will have the same requirements as IPOs, or the IPO requirements themselves will contract, or there will be like kind of a pre-IPO thing, which is a bit less burdensome. What do you think the right way is to do this?
Yeah, it's a good question. I mean, I think you'll have both aspects, both IPOs becoming a bit less burdensome and ICOs becoming more grown up and more like IPOs. And so the way that'll play out is on the IPO side of things. Obviously, some of this activity starting to move on chain in the first place, right? So you have on chain being the actual rails for these instruments being issued, for ownership being tracked, for transferability, for purchasing, and so crypto will be kind of the place that some of these investments and activities are moving to anyway, as well as some cleaning up and some streamlining of the regulation and the disclosures. Like you already have what's called Regulation A, which is basically like a crowdfunding type of approach in the U.S. and it's colloquially called like the mini IPO. And so it's kind of you can sell to a bunch of people. The token or the asset can be traded immediately afterwards in a Reg A offering, and there's a bunch of disclosures teams have to make, but much less drastic bar of disclosures than an IPO. And so I think you'll see that trend continue where IPOs move on chain. They're kind of less and less burdensome. There's some intermediate steps that teams can choose to access like a mini IPO. And at the same time, you're already seeing, right, ICOs become more buttoned up. You're seeing, MiCA, markets in crypto assets regulation in Europe, which basically laid out for the very first time in a major jurisdiction. Here are these things called token offerings, right? They're distinct from a securities offering, but here's the disclosures you need to make to do it in a compliant way, right? And you're seeing the U.S., whether it's the Clarity Act or whether it's some of the guidance that the SEC has kind of been hinting at, moving in a similar direction, where they're saying look, there's going to be a compliant way to do token issuance, token distribution to Americans, but that doesn't mean you can just do anything you want and rampant fraud is possible. You still need to disclose like basic facts, right, about who controls the supply and these sorts of things, focused on kind of investor education. And so I think we'll see ICOs increasingly need kind of the right disclosures and the right, education to make sure people are aware of what they're getting into, the right controls to prevent people from getting defrauded, outright, and at the same time, IPOs becoming a bit more lightweight and moving on chain. And the inevitable result of that, in my opinion, seems to be they eventually merge and become more or less indistinguishable in the same thing. What we call an ICO today would be tokenized equity offering 2, 5, 10 years from now. The tokenized creator offerings that I mentioned. So that's kind of what I mean when I talk about that world, that these worlds
Yeah.
converge, and on-chain rails becomes kind of the tools that we use to do this.
Yeah, that makes a lot of sense to me. Um, and because you're also seeing, I think the other incentive is that you have all these like local stock markets, like even the FTSE, but the Portuguese stock market and stuff that are just terrible places to go public especially as a tech company or a startup. Like
I mean, even
the
even
sort
the
of
London Stock Exchange is kind of
yeah,
dying out, right? Like, yeah.
everything other than the Nasdaq pretty much is gonna cost you a lot in terms of valuation, right? There are like studies done on this of like the delta between going public on one of these exchanges, and so I think for anyone other than the U.S., it seems like adopting this kind of standard is a no-brainer. Like where you can have an actual like global IPO, right? Where you can access anyone that's on chain with it, rather than just the people in your local jurisdiction, because you're already losing out. Like every single, I mean, in Europe, like every successful company ends up going to the US and IPOing there. And then because they
Yeah.
IPO there, then they have headquarters there, and like there's more VCs there and stuff. And it just builds this network effect where it seems like even for countries, for Europe, for LATAM, it makes sense to just adopt this first and give your companies a way to actually go public to the entire world without having to without having to go to the US, basically.
That's a great point. I mean, yeah, you get the better liquidity, higher valuation premiums, right, in the US, and if there were this alternative of on-chain, you would maximize your distribution. You'd have, of course, all the composability benefits, right? So you could start like borrowing against your stock positions, right, and deploying that capital. So yeah, it's all coming, and I think sooner than most people expect.
Yeah. And now sorry, Philip, do you want to add anything there? Otherwise, I'm going to move into just you're good? Cool. So some of the concerns people have with this, and I don't know if you saw the Vlad and Patrick Collison podcast where,
No.
yeah, or not Patrick actually, John Collison, this Stripe co-founder. He does like these podcasts where people allegedly drink beers, but like no one ever finishes their beer, like classic SF thing. But they talk a lot about this. Obviously, Vlad's a huge bull, and John is a bit more skeptical. And there's a lot of people in that believe that for different reasons, right?
Mhm.
And I think one reason that we cover it is just this regulatory reason that isn't this just a way to sidestep the regulations we have around going public? And I think, yeah, I'm curious what your response is to that, and then I'll go through some of the others too.
Yeah, fair. I mean, so to the question of isn't crypto, or isn't just this specifically what we're doing kind of a way to sidestep regulation, I would say there's the way I kind of think about it is crypto as a whole. I increasingly see as the benefit of it is that it is this global kind of sandbox, right? You have composable money, you have things that, arguably, yes, you're going to have fraud at the edges that does need to be reined in, but you don't need to go and ask permission from, a bank's API to build a proof of concept or an MVP, right? You don't need to go and like register with a government, body that will spend literally years processing paperwork before you can even make your first dollar in revenue, right? So I increasingly think of crypto's biggest benefit, in addition to composability, as this permissionless sandbox to try new concepts. And like, yes, that's going to mean sometimes there's gray area of teams doing things that like, maybe seems like it's circumventing existing regulations. But I think it's very much a necessary component if we're going to move forward and if we're going to improve these systems that are sometimes getting in their own way. I'm by no means saying like, we should intentionally circumvent regulation or that, people don't need to be, protected and educated. But I think it's great what crypto has done. Like look at everything that's happening now in traditional finance, right? With streamlining activities and cleaning that up. Like, would any of that happen had all this innovation in crypto not applying this pressure to actually innovate on an industry that has been somewhat stagnant? So like even in the U.S., making a payment on an ACH network, right, was taking days. Now, finally, in recent years, it's kind of advanced a bit and become quicker. So
Yeah.
that's how I think about it.
Yeah. Philip, do you want to add anything there?
I mean, like, we are kind of, on the other hand, looking on the market that is not like we believe that of course, like regulations are kind of limiting everything, which is kind of obvious. That's why we also decided to work with Legion, because those guys are actually like knows everything about that and have a pretty complex and sophisticated plan for that, for actually making it happen. And we believe this is the only way. There's no other way to actually provide such a comprehensive solution for the global market than just aligning with the regulators, starting from probably the biggest economies. And this is exactly how we are approaching that. So we are not the ones that are working on that, but more interested to integrate and be interoperable with the projects and brands that are actually already working on that.
Yeah. No, I agree with all of what you guys said. I would also say that I just think I mean, I'm a big believer in regulation generally, and that we do need the state and protections. But I think the investor protection regulations have mostly protected them from profits, like, and mostly protected them from, and we kind of saw this with crypto, because I mean, I've been a beneficiary of this, but so have many others who would have been locked out of the traditional system, right? You wouldn't have been able to invest in projects. There wouldn't be projects to invest in because they're all like gate kept by SFVC firms. And you saw in crypto, there's like incredibly smart investors that came out of all over the world, like that would never have had the opportunity to do this if it wasn't for crypto. So I don't know. My view is that you should just have disclosure, like very strong disclosure regime with fraud consequences for lying on those disclosures, and then let investors opt in to say, like, I am comfortable that I may lose all my money, that these are high risk investments, but I want to participate. Because otherwise, I think what you have is just like this. Then what often happens with regulations, which is they have good intentions, but they end up having a completely the opposite of what you wanted, right? Which you actually basically meant that the rich got richer. The people who are already accredited, who have the net worth, whatever, just had access to the opportunities and got richer. The VC funds were able to basically get a monopoly on this. And so I don't know. I think crypto is the proof, and I think crypto is also kind of at least partly responsible for catalyzing this change at the SEC that's actually taking like a forward thinking approach to this. So yeah, I think just because that's kind of my take on it. And then some of the other concerns people have is that historically there has been some sort of negative selection in terms of the projects that do ICOs, right? Which is like, I mean, maybe the bluntest way to put it is, if you can get money from a tier one VC, you do that. If you can't, you get money from tier two or tier three VCs. If you can't, you go to like friends and family, depending how much you love them, I guess. And then if you can't, you go to the public, right? That's been like the traditional sort of negative view on ICOs. How do you, and obviously this hasn't been true for everything, like look at Ethereum and things like this, but how do you combat, do you think that there's still that this still happens, and how do you combat this if so?
Yeah, 100% it still happens. I think there's definitely a degree of truth to that, but let's break that down. Like, why is that true? You're describing a waterfall of like value add investor, basically, right? Like, first I go to the most value add investors, then I go to the next ones who are only going to write a check but not really do much. Then I go to friends and family who are like, going to give me money, but not really be able to do literally anything because they don't understand my business and my industry, right? So what that is basically a proxy for value add. And so the solution is building these tools that Cookie and Legion are building, where you can sort through anybody around the globe, whether they're a VC or an individual, and find the value add people, from that audience, right? I think we all can agree in crypto, we've all seen it, how this random pseudonymous account, right, can be this actual like gigabrain genius guy who can just do so much for your project. And being able to discover that person, right, find that person, is what can make a difference between a really, really strong, fundraise, angel round, whatever you want to call it, and just distributing to a bunch of people who show up in your Discord and ask when token. So that's how I kind of see it. It's like we're solving that exact problem. Philip, I don't know if you want to add.
Yeah, I agree. Like you are the experts here, so I can only agree, and I can add on top of that there are plenty ways of actually kind of like measuring reputation or the potential value add coming from those investors, and this is where we comes in, and we can like help, and ultimately we wanna like measure probabilistic value add from everyone that is publicly known in terms of their socials or their wallets. So like taking into account this on-chain and social data, we want to be this kind of like oracle telling the projects, yeah, this guy is pretty valuable. He's actually a strong holder. He's having very strong network that is actually trusting him, and so on and so forth. Because like these pretty detailed elements are ultimately game changers for the project to know that actually.
Yeah. And I mean, in crypto as well, the proof is in the pudding, right? You have so many examples of non-institutional VCs adding ridiculous amounts of value to a project, right? Whether it's like Chainlink God at Chainlink, or Shoku. I guess he's kind of institution sized, but at Hyperliquid. But there's like every community has these people that have just been crucial to the project's success, and really got no benefit from that other than the coins that they bought, like everyone else, going up, right? There was no way to discriminate. And that's really what I see with like what you guys are doing is like there's not this concept of a private sale and a public sale. Everything is kind of public private, right? You apply, and then the project chooses who they want on their cap table. Just as you would like hire people, you choose who you allow to invest into your project. And that I see is like, because right now in TradFi, this is such a problem, because even the companies that try and control their cap tables still get these people putting together SPVs, where some random people end up investing, and then there's a lot of fraud with these SPVs. There's like fees on top. It's not transparent. It makes so much more sense to just enable anyone who wants to come in and add a bunch of value to do so, right? Yeah.
Yeah, I mean, I think you touched briefly on like SPVs. Like that's obviously another point where moving these things on chain is just going to be much more beneficial. Some of these early attempts of like tokenized equity still have these embedded SPVs and these embedded like hidden counterparty risks, right? That aren't really expressed. The more natively these things can be expressed on chain, where the proof of ownership, right, the chain of ownership is kind of transparent and just available for everyone to see, the better off everyone will be. Projects and investors and regulators, they should be happier because people are being protected. Yeah.
What about, I mean, I think those are the best ones, but some people also say that investors, only professionals can do this, right? Like investors, like retail is just going to get wrecked, as they have like every cycle. These people argue, and so it's going to basically end up causing a lot more damage than good. How do you think of that argument?
I mean, let's set the hypocrisy aside that like people can go on a betting site, right, and play these like strictly negative
Yeah,
expected value games. Like
lotteries. In Portugal, we have a state-run lottery system.
yeah,
Like,
yeah,
yeah.
good. So let's set the negative value, hypocrisy argument aside and just look at kind of outright. I mean, I reject the premise kind of, or you have to have a scary premise that, there should be this nanny state that is telling you what you're smart enough to invest in, right? I think I'm all for preventing fraud. Can't stand the fraudsters in this space, right? give people like common language disclosures that they can understand, that makes them aware of the risks, right? Make them sure that they're maybe there's a quiz that evaluates their knowledge. Like they say they understand the risks of blockchain, but do they actually even understand, the basics, the difference between private keys and public keys, for instance? That would be necessary to know, to not get your face ripped off. So I'm all for that aspect of like validate that people understand the risks they're getting into, and then at the end of the day, if they really want this, you've got to step back and let them do it. The alternative is basically this nanny state that tells people, oh nope, sorry, you're not rich enough or you're not smart enough to get into this. You have no idea, right? It could be someone who really knows that space and like this is their their first investment they're making, but like they know the team or they know the space or they've been working as in the industry as like a hobby project and they feel like they have an edge. Just let them be educated and protect them from fraud, but let people make their own decisions. I think we have to go that route. And I think on a quick final note, like given how blockchain works and the permissionless system, and then the convergence of that with AI, creative AI spinning up just new content and new ideas and new projects so quickly, like there's no way for regulation to keep up even if you try to take the framework of we've got to rubber stamp, every single investment. Like realistically, regulators are going to have to adapt to a disclosure focused type of regime and then just go after the outright fraud. There's no way you can control all the stuff that's spinning up that could be invested in.
Yeah, that's pretty much my take on it too. I'm curious, Philip, if you have anything to add there.
Yeah, actually not so much, because like we are not the ones that are actually like that have to care about that, or
Yeah.
fortunately. So as I said, like we are kind of like utilizing the knowledge and know-how of our friends from Legion, and this is why we are also bullish on this and this kind of like approach, because we believe that you have to focus on your own niche and to be kind of like the best in it. And this is what we are trying to do with like creators
Yeah.
economy, ultimately making this like information market very effective. Maybe in the future also tokenizing creators, as Mati said previously, because like this is probably the way of making the creators economy market even like more effective, to like tokenize creators and let the market decide about their value as well.
Yeah. Yeah, I'm always skeptical of these arguments that only professionals should be allowed to do this, whatever. I think with the internet, uh, they've been proven completely wrong in the sense that there's been countless examples where some random person on the internet knew a lot more than the professionals and was kind of told to shut up, you're not an expert in this, and turned out to be right. And I think that's kind of the history of the internet too, is where there's Airbnb, like Uber,
Or a lot
just
of stuff
showing
from
that.
COVID, right? Like,
Yeah, exactly. COVID, like there's so many examples of this, and I think crypto itself is the litmus test for this, where you kind of saw these people that weren't professional investors, the Arthur Chungs of the world, that came up through these communities and ended up becoming some of the best investors, and I think we'll have some of the best investors of like this generation will have either started off or be crypto investors, and have no formal training. And with AI, that's even going to be more the case, right? You can learn anything so much quicker. I'm very, yeah, very, very skeptical of this. I had another question. Oh yeah, and I also thought it was interesting, like, because to some, like what you said, the waterfall of value add made a lot of sense to me. I think it's a great metaphor. And in a sense, people are using like proxies for the value add, right? Like, this tier one VC has a brand name like A16Z. We know them. They've invested in huge projects. They must be good. Or this person, is referred by this person, and in a sense, what like Cookie3 allows you to do is get to the raw data rather than have to use proxies, right? Like you don't need to rely on reputation or brand name or anything like this. You can actually see the raw value add data of who this person is and whether they can add value or not. And like we said when we've been saying this whole time, that there's many individuals who add way more value than actual firms and well-known firms, but just because of the dynamics, right? And like a VC firm, like we have nearly 200 portfolio companies at this point, and then your incentives are always to be on the lookout for the next one rather than the existing ones. So necessarily, if someone's coming up and it's their first investment, they're going to treat it like it's life or death, right? They're gonna be on it all the time and stuff. And so I'm so excited about what you guys are building. I think it's one of the most important things that's happening in crypto. It's actually the reason I originally got into crypto. Was ICOs was the thing that really got me excited. So yeah, really cool that you guys are kind of bringing it back. Maybe the last or I always say last, then end up asking more. So I'll just say one more question is on the SEC. This SEC seems very progressive towards this vision of the world generally. Obviously, Hester Pierce has been huge on this. What do you think? Maybe what's the latest out of them? Like I've read a few of the papers, but I'm not fully up to date with it. And then what do you think they should do?
Yeah. So to set a little bit of the context, right? Like they have the Genius Act is passed in the U.S., right, and then they have the Clarity Act. There's a version in the House and a version in the Senate that might go through. There's a lot of implications, but the TLDR is that both of them set some kind of rules for doing token distributions to Americans, right? And both of them have different frameworks, largely around like decentralization or the rights granted by the token. Senate one being a bit simpler in those criteria. So the SEC is in a position where there might be an act that passes from the House and the Senate, or there might not. So there is kind of a difficult position to be in, because you can imagine they don't want to just like release guidance and like end up contradicting or front running, the Senate, for instance. But I think they also have to realize, and the language, coming out from the SEC and from the chairman does reflect like the urgency. Like companies are waiting on this, right? The market is waiting on this. Individual investors, as you mentioned, Jose, are getting screwed out of missing airdrops and like getting protected out of profits, right? So this is having a material impact. And so they've increasingly kind of ramped up the verbiage they're using and the language around token distributions, and we're gonna lean into, as the SEC, like exemptive relief and like taking a more active stance. None of the rules have yet changed, but even just Gary's departure, right, drastically changed the practical risk of the SEC going out of its way to go after projects on minor technicalities, right? And that alone just means that people can do a lot more, have to worry less about, did I cross my T's and dot my I's? Like, yes, of course they should be doing that, but less adversarial. So it would be my hope that, and the SEC's latest language is more around, tokens as applying common sense, similar to Mika. They're not granting you equity ownership rights, right? They're not granting you dividend rights. They're not represented or marketed as if they were these equity stakes in companies. They are not securities by nature of what the rights they kind of grant you. And then all these, decentralization complex metrics might be relevant to disclosures, but are not necessarily relevant to whether it's a security or not. And so the direction they're kind of leaning is like, let's not overcomplicate it. This is literally not a security. It's not, entitling you to any legal protections or promises. It's more akin to like a collectible. Let projects distribute those things, and then there's disclosures to make. And the SEC seems to be indicating that if clarity doesn't come from the House or the Senate, they will be providing guidance to this effect themselves. So time-wise, who knows, right? Regulators always move more slowly than we as an industry would like, but definitely promising type of language coming out of the SEC.
Yeah, that's promising for sure. Yeah, I mean, for me, I would love just the disclosures and let people price the different levels of trust, right? And let's see what the market thinks. I think eventually we will settle on the structures that make sense, which, for some things will be securities with legally enforceable rights. For other things, they might just be smart contracts with smart contract enforced rights. And people may end up having faith in those even more so than they have in securities in some cases. So I don't know. That's what I hope to see.
Yeah, I think a mental model that I recently heard was like securities are kind of like ownership of a company, right?
Mhm.
And maybe there's this new asset class thing called a token, which is ownership of a product line, right? Of the smart contract, not the whole entire company, not a team, but of a product. So That would be an interesting thing to see codified into law, that kind of distinction.
Yeah. I don't know about product line. Yeah. Anyway, I see it more as a network because some like there's you're buying varying levels of trust with different systems, right? And in some
Yeah,
systems you're really depending on the team choosing to buy back the token, like pump fun
sure,
or whatever.
sure.
Like you have no really even contractual rights or smart contract rights to them. In
Yep,
other systems, um, that's not like Maker or something or Hyperliquid. You actually
yeah,
have a
really
smart
cool.
contract,
Right.
curve. It's encoded in, and that
Yeah,
arguably, assuming that the governance is fairly distributed and stuff, is arguably even a stronger right than securities in most countries. Maybe not in the U.S., but probably in most countries, you'd rather have that than be rely on that country's legal system.
I would
And
agree
I
with
think
that.
all these different trust like levels of trust will just get priced by the market. If we have disclosures and people know, oh, it's a multi-sig that's actually running this whole system, or it's a single admin key, or it's a security, all this stuff I think could just get priced appropriately. But
Yep.
yeah,
Yes,
cool.
standardization of terminology and disclosures is all key to that, maturing.
Awesome. We've just cleared the 1 hour mark. This has been really interesting. Got me even more bowled up on what you guys are doing than I was before. It's nice to have an hour to chat about it. Is there anything I missed? Anything you guys want to touch on that I didn't?
I think, Philip, I'd love to hear more about kind of what's next for Cookie. I think we want to touch on that.
Yeah, sure, of course. So basically, I believe that the next few phases will be including like digging deeper in terms of understanding the individuals, also like participating in the pre-sales on Legion, to not only be limited to their own kind of representatives, but also to the audience they are that is actually backing them. So I believe that the reputation should not only include the direct components and direct characteristics of the specific people that are participating in the pre-sales, but also their influence or the network. And retrospectively, we can actually measure that. So I believe this will be the next what kind of like implementations we will be aiming to provide in terms of like more sophisticated data points, as well as the like historical kind of behavior in terms of the loyalty, in terms of the advocacy for something after the pre-sale, because once we start with like more and more pre-sale and in attention capital markets, we'll have more and more data to actually analyze and to come up with new ways of scoring the behaviors, the quality behaviors of ambassadors, of true believers. And this is, I think, very exciting for us, that there is a ton of things to still discover in these data sets that we maybe didn't even come up with yet. But I strongly believe that this is where many answers are actually waiting. So yeah,
Does
this is
does
where
that
we are
intersect
heading.
with like does that intersect with proof of humanity at all, in your opinion?
Sorry, once again.
Does that intersect with with
Oh
these
yeah, I
tool
mean like
protocols like prove you're a unique human being?
yeah, it has to like it will be kind of, I guess, mandatory to include that in the future. Like maybe not right now, because we are not so swamped with AI agent yet, but I guess in the coming months it has to be involved as well.
Yeah, makes
Yeah.
sense. It's a brave new world we're headed into. They kind of condoned and unofficial AI agents running everything.
Yeah. I mean, I think the what's really coming into the fore for me, like listening to both you guys, is just a full stack for like doing your distribution, right? Which
Yep.
I think raising money has increasingly been seen as part of distribution, like getting the right partners and investors on board. So being able to target the right people to participate in the project, to talk about it, to add TVL, to use the strategies, and then also the right people on the cap table, and hopefully making the overlap as big as possible. That was always another of the promises of crypto for me, was that you'd have these kind of cooperative networks where they're owned by the people who add the most value to them. And
Yep.
we've only found very kind of dumb ways to do that, like just TVL and your share of TVL is the share of tokens that you receive. And I think with what Cookie3 is building, combined with you guys, you can really be very granular with this and have these networks that are entirely owned by the highest value add participants. And that could unlock some like really crazy, I think, growth flywheels and things. Like if I imagine some of the 2021 projects having like this kind of system, and being able to use these tools, I think it could have gotten even crazier. Like some of the stuff we saw there. So yeah, it's exciting.
Yeah, I mean, we're finally doing it, evolving the space, moving away from just airdropping, which we know doesn't work, and moving into these more smarter methods of token distribution. I think a sale component is just as much about a better mechanism for distribution as it is for raising funds, right? You have a totally different cost basis, different psychological relationship, different tax implications for buying in versus an airdrop. So all of that matters to like, does someone actually dump these tokens immediately when they receive them? Or do they hold on to them and then actually reinvest their time and effort and capital into the project?
Yeah, skin in the game.
Exactly.
All right, guys. On that note, I think we'll wrap. This was an awesome chat. Really appreciate you both jumping on. And maybe like where can people find out more about you, or even sign up and start seeing like what opportunities there are for them to add value to these projects?
Yeah, on the Legion side of things, it's legion.cc is the website. That's also our X handle, legion.cc. So that's an amazing place to start. And of course, you'll see Cookie plugged in there if you're watching for deals. But Philip, where should people check out Cookie?
Yeah, so there's like platform cookie.fan where you can see all like ACM pre-sales actually happening and the campaigns related to them. And on X, obviously, the same handle, so like cookie.fan. So yeah, this is where you can find us.
Awesome. Thanks very much, guys, and hope to chat to you soon in a year, and that we're closer to this utopian vision of the democratic capital markets and attention capital markets. Cheers.
Thanks, Jose.